Taking a look at the interest rate market today, I want to focus on the 10-year note. Really, we look at the bond market, big moves all the way across the curve, but the 10-year having a big move higher, pushing up over 125. 125.06 was the settle, 125.07 was the high, 124.15 was the low, and that was really at the start of the day. And we saw this rally really materialize as we saw the equity markets come under some significant selling pressure today. When you look at what's going on here in the bond market, we're looking at the 10-year note now being priced at new 2019 highs. This continuation as far as when you see this money, basically what appears to be flowing out of some of the equity markets and the commodity space in the bond markets. We're seeing big volume. Actually, when you look at the June contract and the 10-year, largest volume for the contract, I believe, in the futures complex today. Also looking at yields now, with that rally in the bond market and the note market, we're seeing the 10-year yield push down to new lows, actually to lows that we have not seen since October of 2017. We did see the 10-year push below the 2.30 level, settled right around there, but actually got down to 2.294, I believe was the low print of the day. So once again, continued pressure on rates. We've seen it across the complex, and certainly it was amplified in the 10-year note today. Looking at the volatility in the market, I think that's, again, the driving factor here. Not only are we seeing the volatility play out in the bond market, but equity markets, commodity markets, and with this continued downward pressure now on the S&P, when you look at the S&P down around that 2,800 level, pushing back down to the May lows, we're seeing volatility pick up here and momentum to the downside pick up in both the equity markets and the commodity space, and we're seeing that safe haven type of initiation of money flowing out of the risky assets and into what would be perceived as safer assets, particularly when you look at the bond and the note market, also the Japanese yen getting bid up firmly today, as well as gold seeing a bounce as well. So we are seeing a big rotation here as we continue to see further weakness in the equity markets, commodity space, with oil down 5% today as well. And that's all coalescing into what appears to be a firm bid for the bond market, and particularly when you look at the 10-year note market, where it went to 2019 highs today.